How to identify double top formation? Is the US market still forming this double top formation, or the pattern has already completed, signaling a deeper correction to come? In this discussion, we will focus on the latter question, whether this bear is going to be a long haul bear. I'm Kon Hao. My work in this channel is to study behavioral science and finance, discover correlation between different markets, and uncover potential opportunity. Before we discuss about today's topic, please take time to read the disclaimer. And the first part, we're going to discuss about how to identify the double top formation, whether it has been completed. And we can see that there was two peak here, almost identical. Whether is it higher or lower than previous, it doesn't really matter, but it has to be almost identical peak. But how can we confirm that this double top formation is completed and it's turning bear? Is this trend line, the well-supported trend line? It is important. And let me just go to the daily chart here. And how to construct this well-supported trend line is that we have to find at least three significant trough. And we can see that it's supported almost neatly, in fact, more than three. And this qualified that it is well supported. It means that one that is being compromised, it is broken below. It also means that there's a changing hand, a transition of a bull to a bear market. And we can see very clearly that during this period in the month of March, the market have turned from a bull to the bear market. And we can see that as it moved down, it retraced up, and this could be a perfect selling or letting go opportunity in the US stock market. And let's discuss about point number two here, is that how to cross reference to its related market. And in the month of March, before the Trump latest policy on the Liberation Day tariff, we spotted that in March the 13th. And then our discussion was that in NASDAQ, so earlier we discussed about Dow Jones, this was NASDAQ. We also saw a very similar behavior, that there's this double top formation. And then, of course, we are observing very closely. This is a crucial line. If it's going to break below or well supported and continuous uptrend, of course, I do not know that. So therefore, my tutorial back then was to keep watch very closely. And what we saw here is that it has broke below. And let's look at the latest right now based on the live result. And we can see that it has convincingly broke below this well-supported uptrend line. It also means that the bear may be just the beginning. And let's also look at the other study that we did at the beginning of this year. And that was in January. And I took the opportunity to look at the potential trend at the beginning of this year. So that was in January. And then we studied about the NASDAQ reacted well to the upper band. And this was what we're seeing here. That was December close. And let's look at the latest result here. And December closing, I could see that it reacted very nicely to this upper band. And how did I construct this upper band that the market have reacted so well in December closing last year? It was using this well-supported uptrend line on the monthly chart perspective. And then I mirror it to the significant peaks way back in year 2000. And there I saw that there was this reaction, and that was Jan. And I suspect that market is testing this upper band. And now I think the result is pretty straightforward. So I would see that in time to come, market may continue to be very volatile, and unlikely that this year we're going to break above this high and continue to move up. Very unlikely. Let's move on to the third point of discussion here, is that how do the fundamental development confirm these technicals study? It is the Trump's Liberation Day tariffs. It may have set the tone, but it is beyond the trade war. It is the inflation may once again pick up, which is very likely to happen in time to come. With tariffs, it will take maybe a month or two to kick into all this data. and we will see that much later. And do visit the previous tutorial that we have. We discussed about what Fed is actually looking at. There are so many datas, CPI, core CPI, but they are looking at the core PCE. So in conclusion, is this bear going to be a short-term or long haul bear? And with that, I'm going to look at the 3-month chart here. And we can see very clearly that that was this inverted hammer. That was last quarter or the previous quarter, and that was the last quarter closing in March. So at the close of March, there was just a few days ago, and I could see that there was this another inverted hammer. And throughout history, and we hardly saw this inverted hammer. Let me just bring it down here. And throughout history, we don't see that at all. And when I saw this, I wouldn't say I'm thrilled, but I'm a bit concerned that this bear may be just at the beginning. Remember, just now we studied on the monthly chart, but this is a quarterly chart. It means that when we look at the market and analyze the market, we think about much longer term. And I would say that this down move could be just at its beginning. We cannot perfectly time the market, but it is possible to get market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.